in this video, traders, let's look at the difference between fundamental and technical analysis and how we can potentially bring one or the other into our trading to improve our trading returns. Stay tuned. Many of us put ourselves in one camp, and let's be honest, if you're watching this, you're probably going to be in the technical camp. You're like, I don't care about fundamentals, I'm not interested, and that's fine to a certain extent, but maybe this video might get you to think a little bit differently, and maybe you can add a little bit of a sprinkling of fundamentals into the recipe of your trade that might help you generate better trade ideas, might help you stay on the right side of stuff. So that's the idea of this video, so stick around even if you're thinking, well, fundamentals, don't really care. So let's look at two ends of the scale for time being. We've got one end of the scale being fundamentals, which is you're a hedge fund manager, you're holding stuff for 10 years, 20 years, whatever. You don't care about what the chart is doing. You're not bothered. You're not interested. And if you're other end of the scale, you're a micro scalper, you're trading on very, very short term. Again, you don't care what the fundamentals are. So, but you're likely going to sit somewhere in the middle. You're a day trader, you're a swing trader, and as you've got the time frames, the more the fundamentals start to play a bit of a role. You might think, well, they don't play a part in my trading at all, but let's just address that situation. So before we do that, let's look at what fundamentals are. So for me, from my perspective, we've got things like earnings, PE ratio for trading stock. We've got interest rates, economic situation like GDP numbers, jobs numbers, etc. If you're trading currency pair, obviously if you're trading a currency pair, you're looking at the economic situation of two countries or two economies, and one strong, one weak, and looking for a trending environment, or maybe they're both very, very similar if you're range bound. You get the idea. So, and obviously we're trading commodities, you're going to have things like what's the economic situation of the consumer, the producer, what's the supply, what's the demand, what's the cost to produce it, lots of other stuff. These are the fundamental things that are going to drive the profitability of that company, of that economy, etc. And you're looking at, and generally speaking, guys, this takes a long time to play out. Generally speaking, not always, we'll get to that in a moment, but generally speaking, if you think a company is going to continue improving earnings, improving margins and reducing costs and reducing debt, you're going to think that's a good investment on over a 5-year period that should pay dividends and pay your dividends as well, and it should grow in value. Same if you're trading a currency pair, you're like, okay, I think there's money flowing from this country to that country, or this country is going to do very well because they are very much involved in commodity mining, whatever it may be. They're going to play out over a long period of time. Technicals is all about what's the trend looking like, what's the price action looking like, what are the levels, things like support levels, resistance levels, candlestick patterns, order flow, you name it. You guys have been on the channel for a while, you know what we talk about. We know that's what we're kind of about here, a lot more about technicals. But one thing to think about, guys, is you may think this is irrelevant, and or maybe it's only relevant for a specific time of day. Okay, I want to know what's the event risk going to be on the day. Is that going to be some earnings coming out? Is it going to be some sort of non-farm payrolls? Is something going to influence the actual direction of the market that I'm trading? If so, you might want to worry about them. But there's something more to it. And this is this bigger picture, or this fundamental theme, if you like, has a big influence on what's going to occur in the chart. Because yes, we might have these short-term movements, and yes, we might have pullbacks, and yes, we might have range-bound conditions and stuff, but ultimately, if the bigger theme is playing out, and let's say economy is booming, let's say interest rates are low, let's say the company is doing well, or whatever we however we wrap it up, let's assume a bullish argument for the asset we're looking at. Now that over time is going to create money flowing in and buying pressure. So even if you're not observing that, you're not kind of doing any deep fundamental analysis, I don't think you need to, but just having that awareness and saying, right, well, there's a lot of money flowing into this asset because of this fundamental reason. What is that fundamental reason? It's X, it's Y, it's Z. That means that the pressure on the asset that I'm trading is going to be upwards, and that will start to be apparent when we're looking at the trend, we're looking at the price action. In other words, when you're seeing pullbacks, you're probably not going to be, unless you're very, very short term, of course. This is why we look at time frames. The smaller your time frame, the less valid they are. But let's say you're swing trading, you get a 4 or 5 day pullback on an asset that's very, very strong because of a fundamental reason. You might not want to be shorting that, even though technically you've seen a kind of exhaustion candle, technically you've seen a double top, technically it's all ticking these boxes for reversal. The fundamental overlying pressure might overrule your decision to go short on that. because ultimately, this will ring true and this will create the pressure for the longer period of time. Yes, it might not be evident for weeks at a time, days at a time, even months at a time, but ultimately that's the pressure that is going to be keeping the market moving higher or lower, depending on where the pressure is coming from. So having that in mind might mean that you don't take trades that, even though are technically very sound, they tick all the boxes, you don't take them because you're thinking, hey, that's the kind of ultimate ruler, if you like. The fundamental pressure is the ultimate ruler. I am only going to align with where the fundamentals lie. Now, of course, there's a challenge of when those fundamentals change, and that's what we talk about when interest rate cycles start to change. We're talking about the economy, when earnings start to change, surprise earnings and stuff. That's why stocks can be so interesting, because they can have earnings surprises that mess things up and change people's opinions on the fundamentals. But generally, if we keep the example broad for now, generally if everyone's consensus is that this is okay, this is growing, this is good, this is growth, that's going to have an upward pressure. So from a technical trading perspective, you might go, well, I don't want to even touch a short on that. I don't even want to entertain a short, even if it's the most technically sound short ever, because I have that broader pressure that's pushing the market higher. Or you might even say, okay, that means I only trade shorts on a smaller position size. I risk less on the short side because fundamentals are still very, very bullish and driving this higher, even though there is a short-term opportunity for a mean reversion trade, a bit of an exhaustion trade, and playing it that way. So, and obviously going down the time frames, that becomes less relevant. So maybe stepping back and understanding what's driving the market, understanding what people are looking at in the market you're trading, can mean that you're not taking trades that are perhaps a little bit not over trading, so to speak. So I'm always looking for a reason to not trade, guys. I want to risk my capital when something's ticking all my boxes. And if there's a kind of nice reversal trade that's going against the grains, so to speak, I want to be very mindful about that, because I don't know when it's going to reverse. Whereas if you're taking a trade that's going with the movement, then even if your trade is kind of a little bit late, your trigger's not that great, because the whole tide is rising, you get forgiven a little bit. So it just makes life easier. Risk-reward ratio is higher, the probability of success is higher, and when you bring those two things up, multiplied by 100 kind of sample size, that's when you start to improve. So maybe it's time to consider a little bit of the fundamentals. Maybe it's time to consider a little bit about what is driving the market. You don't have to go into too much depth and start being an analyst or economist, but understanding this. And the final thing, guys, is that, hey, what about the daily fundamentals? If you're trading intraday, there might be something that's affecting the market intraday. It's the pressure from a surprise jobs number, it's the pressure from this, or it's the pause and wait for a jobs number coming up, which might cause a mean reversion, range bound type trade until that comes out, or an election or something. So there's daily fundamentals as well. And even though that's a bit of an odd thing to say, these are the type of things that influence the market. You've got to remember what is driving the market, where the big money is coming from, where the big money is getting pulled out, where it's getting pushed in, and that ultimately will affect our technicals, our price action, our levels, our candlestick triggers, order flow, all that kind of stuff. So fundamentals versus technicals, yes, we tend to set our flag in one camp or another, but maybe being a bit more flexible, and maybe not necessarily making the decision solely on fundamentals, but having it as a little bit of a part and saying, hey, you know what, maybe I need to check every now and then that the fundamentals are still pointing in the direction that I want them to. Are they neutral? Are they bullish? Are they bearish? Does that affect how I'm making my shorter term trading decisions? Bye bye.